This is Len Suzio with GeoData Vision. It's late March 2021, and I've been inspired to record this video about PPP loans because, as a CRA consultant, I have been surprised by the number of banks that have failed to identify and isolate all their PPP loans for community development credit under the Community Reinvestment Act. Even more shocking to me is that some banks have not reported the large PPP loans over $1 million as community development loans in their 2020 CRA filings. In this video, I want to explain how PPP loans can earn your bank significant credit for both community development activities and for flexible and innovative and complex lending responsive to community needs. In the next 10 minutes in this presentation, I will cover the following topics: how PPP loans may qualify for two different definitions of community development in a CRA exam, what qualifies as economic development for community development purposes, what qualifies as revitalization stabilization for community development purposes, how PPP loans qualify for flexible and innovative credit in a CRA exam, the information you must collect to qualify PPP loans for community development purposes, key items in the SBA PPP application needed for community development credit, the SBA size standards themselves, a checklist of data you must collect to substantiate PPP community development qualifications, and finally, why some banks should consider refiling their 2020 CRA data as soon as possible. PPP loans can really bolster your CRA performance because, first, they potentially qualify as economic development under CRA. Second, they potentially qualify for revitalization stabilization community development definition under CRA, and they all qualify as flexible and innovative lending responsive to community needs, as well as complex lending under community development. This means these loans all have a significant potential to affect your bank's performance under CRA and benefit your bank. So what qualifies as economic development under CRA? Well, there's two tests that are applied. First, there's a purpose test, which must involve job creation, job retention, or job improvement, primarily for low or moderate income employees. And second, there's a size test. The borrower must have a gross annual revenues of $1 million or less, or must meet the size standards embedded in the SBA regulations under Part 121. All loans, PPP loans that is, for 1 million or less must be reported as small business loans, but for CRA examination purposes, they can be considered as community development under the economic development definition for banks examined under the ISB exam standards. Let's review what qualifies as economic development under CRA. To qualify for economic development, a CRA loan must pass both a purpose test and a size test. To meet the purpose test, a loan must support job creation, preservation, or improvement, primarily for LMI employees. PPP loans, by definition, are for job preservation. In many industries, such as restaurants, almost all employees probably qualify as low or moderate income wages. It would be helpful if a bank could collect information about the range of pay for PPP borrowers, and we'll have more information on that on the next slide. To meet the size test, a PPP borrower must have gross annual revenues of $1 million or less, or meet the SBA size standards inherent in Part 121, which is quite liberal, as you will find out in a few minutes. So don't give up just because you have a borrower that had gross annual revenues exceeding $1 million. Although all PPP loans of $1 million or less must be reported as small business loans, ISBs can still get credit for community development, and all PPP loans qualify as flexible and innovative and complex for extra CRA credit. So isolate and compile all your PPP loans. On your screen, you can see an example of the SBA Payroll Protection program application, a section of the application, and it has some very important information on it that you need to get community development credit under CRA. It has the NAICS code for the borrower. It has the number of employees for the borrower as well. And it also has information regarding the average monthly payroll. So basically, you can estimate or compute what the average payroll is per employee on a monthly basis, and from that, determine if they're low or moderate income beneficiaries or not. This is important, again, to fulfill the economic development definition. Get the GAR, get the gross annual revenue code. You need the gross annual revenue code to determine and document if the borrower meets a size test. Now, without the GAR, you still may be able to meet the size test if the SBA size standard for the industry of the borrower is based on the number of employees and not the gross annual revenue of the borrower. This is a sample of the SBA size standards table. You can see several things that are important here. First, you can see that the size standards is specified either in terms of the number of employees or based on the gross annual revenue. And you can also see that sometimes the size standard can be very large, both in terms of number of employees and the dollar value of the gross revenues of the business. In fact, for some industries, then depending on their NAICS code, the size can be as many as 1,500 employees and or $41.5 million of gross annual revenue. Now, PPP loans also may qualify for automatic community development recognition under the revitalization stabilization definition per the March 8th, 2021 Interagency Joint Bulletin. PPP loans in an LMI tract or a distressed or underserved non-metropolitan middle-income geography will automatically qualify under the revitalization stabilization definition. And for this definition, you don't need the GAR, the gross annual revenue, to fulfill the community development purpose. This also means that some PPP loans could qualify under two CD definitions, thereby enhancing the value for community development purposes and credit under the regulation. To help you get maximum credit in a CRA exam for all your PPP loans, we've created this to-do list for you to review. First, identify, isolate, and compile all PPP loans, even the loans under $1 million, because first of all, intermediate small banks can claim those for community development credit, and even the large banks can claim them as flexible and innovative lending, which will earn them extra credit in a CRA exam. Make sure you have the gross annual revenue for each borrower. It's worth it to go back and get that information because it's extremely valuable for you to get this community development credit in a CRA exam. And the GAR, the gross annual revenue code, is very important in that determination. Then create a spreadsheet with all the PPP loans, including these fields below: a unique loan number, a borrower name, the amount of the loan, the gross annual revenue of the borrower, the NAICS code for the borrower, which is on the SBA PPP application, the number of employees, again on the SBA PPP application, the wage distribution of jobs preserved by the PPP loan. And again, the SBA PPP application at least has not only the number of employees, but the gross monthly payroll. So you can at least approximate the average wages paid by the employer and determine if they fall within that low or moderate income category for the location of the borrower. The census tract and the tract income class for the borrower's location, and that's important again for the revitalization stabilization definition. And many of your PPP loans may qualify under both economic development and revitalization stabilization, which makes them even more valuable for community development credit. And finally, a copy of the SBA Part 121 table with the SBA size limit for borrowers, the borrower's NAICS code. And for those of you who don't have a copy of the SBA table for Part 121, you can get that by going to the Geodata Vision website, where we have free copies available in a PDF form for anyone who wants to download that. So think about refiling your 2020 CRA data if you did not report your large PPP loans that were over $1 million. By failing to do so, your performance will be understated and put you at a big disadvantage in the eyes of the regulators and in the eyes of community activists who look at the annual aggregate and disclosure data when it's released by the FFIC, which will be later this year. You will look bad in comparison to other banks that have reported their large PPP loans as community development. And don't forget, too, the annual aggregate and disclosure data helps set the standard for performance expectations after it's released. It's not too late to refile your 2020 CRA data if you have omitted reporting the large PPP loans, but you must do so as soon as possible. While the official filing deadline passed on March 1st, it takes a while for the FFIC to compile all the information, and usually it's not too late to have your refiled data included in the public data that will be released later this year if you get the refiled data into the FFIC by the end of March or the early part of April. So once again, I encourage all my clients, if you fail to report the large PPP loans as community development, think seriously about refiling your 2020 CRA data so that your true performance is reflected in the public data when it's released later this year. It will enhance your appearance in that data. It will make you look better relative to the competition, and it'll be a true reflection on what you really did for your community and its needs in 2020.